Right now, we're witnessing a truly remarkable phenomenon for Ethereum and XRP holders. We are currently witnessing a great deal of liquidity flowing into Ethereum, followed immediately after by complete chaos for the rest of the altcoin market. I made today's video for you amazing folks for that reason. Let's get started and see what Tom Lee has to say in this video. In the short run, Ethereum's fair value has little bearing on what the cryptocurrency performs. Take a look at it last week. It reached 3,300 because some people were trading in pairs, had liquidation levels, or believed Ethereum was a dead chain. They are attempting to impose levels of liquidation and are betting on another chain. I believe Ethereum is having its Bitcoin 2017 moment this year, if people go back to 2017, where ETH is finally receiving support from Wall Street. The short-term price that people should consider, in my opinion, is Ethereum reaching $4,000 since it ought to, and is a stronger story than it was in December, when it reached $4,000 as well. Thus, it should come as no surprise that Ethereum has risen above $4,000. Now that it is above $4,200, it has completely destroyed that price objective. In addition, we are witnessing a minor pullback in XRP's price during the same time frame, which is a very healthy correction given the state of the market. The problem is that, due to a process that Tom Lee just explained and will elaborate on, all of the liquidity that is pouring into Ethereum will eventually cycle downward. Whales are always searching for the next big thing. Establishments search for the next big thing. As a result, they believe that Ethereum has somewhat peaked in terms of recent price movement. At that point, a lot of liquidity begins to flow into other altcoins, such as XRP. This is essentially what happened in December when Ethereum reached the previous peak that Tom Lee just highlighted, and I believe that this is also what will happen very shortly. In my opinion, Ethereum will reach its peak in the next 30 days, after which the XRP ecosystem will be hit by a tsunami. And I really think we're going to witness some insane price movement there. Thus, in today's video, we will discuss it. Let's listen to Tom Lee's thoughts on the Ethereum topic. I'll connect it to XRP through this. Keep an eye out. Let's begin. Currently, 3.2% of the network circulating supply is MicroStrategy. However, MicroStrategy aims to reach at least 1 million Bitcoin, or around 5%. Additionally, remember that MicroStrategy will have a sovereign put once they acquire 1 million Bitcoin. They play a crucial strategic role in the Bitcoin ecosystem. In other words, it is likely to be challenging for the US to purchase 1 million Bitcoin on the open market if it wishes to establish a strategic reserve since, as soon as it does, sellers will likely decrease, and the price of Bitcoin may immediately reach $1 million. It might be simpler for someone to reach 1 million Bitcoins with the micro method. That's what I refer to as a sovereign put. In 5 years, MicroStrategies were able to reach the 3%. For the past 5 years, they were essentially purchasing 16 cents worth of Bitcoin every day. If you look at Bitmine from the beginning to the present, it has increased Ethereum by roughly 80 cents to $1 every day. Thus, it is around 12 times quicker than MicroStrategy. It makes sense that we would be a benevolent entity in that we would be doing everything completely in accordance with the concept of a legally compliant blockchain, such as Ethereum, and that Bitmine is keeping every single aspect of its operations in the United States. Therefore, we would be on a path to reach 5%, most likely at a rate that is 12 times faster than MicroStrategy. Therefore, it is quite compatible with what the US government and Wall Street would want to see in an individual who is heavily staking Ethereum. Equally important, ETH will be the basis for a large portion of Wall Street's blockchain financialization. Eventually, someone on Twitter, I believe, pointed out that staking Ethereum for Wall Street is similar to players purchasing NVIDIA. It would have been preferable to both purchase NVIDIA and be a gamer or a gaming firm. However, due to the way blockchains operate, Wall Street has the exact notion that if they tokenize real assets like stocks, money markets, and dollars, they will want to own ETH itself. However, they also want the person staking it to be an organization that is genuinely working to advance Ethereum's objectives. Therefore, I believe that staking ETH serves a very significant purpose. The SEC intends to transition the financial sector to the blockchain, and Ethereum is the biggest blockchain that complies with US regulations, according to the Genius Act. It's a blockchain with legal recognition. However, it goes without saying that other nations can use this blockchain. It is clear that the US wishes to increase its influence and position on this blockchain. Naturally, bear in mind that there are other storylines that will be released on Ethereum. AI too, isn't it? If you're going to tokenize anything, even robots, you want a blockchain that can be safeguarded. Thus, Wall Street and technology are merging onto Ethereum. Do JP Morgan and Goldman Sachs want Ethereum to be stored in millions of separate wallets? They want to ensure that the staking is done in a compliant manner even though not everyone will choose to do so. They are not attempting to centralize it. However, as we stated at the outset, BitMine's balance sheet is thought to be extremely clean. There isn't any fancy capital structure or anything like that. We have yet to reveal our staking solution, but we are taking our time because, first of all, deciding how to stake $3 billion worth of Ethereum is a major decision. But it will also be fully compatible with GAP and the way the United States would truly like it to be staked. Therefore, I believe that we are adopting a very careful strategy. However, everything you just said, let's say, simply proves that Ethereum treasury firms are essential infrastructure. And I don't disagree. This play is more than simply a treasury one. And in return, you're at least getting a stake yield, but they might be getting other sources of revenue. I believe you're emphasizing that these Ethereum treasuries are more than just an ETF substitute. I'll see you all again soon. Goodbye.